Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. This is something I have not said for years. We had a major IPO today, initial public offering. It is the first time that people like me and you can invest in a company on the ground floor. But what was this company? Are they worth investing in? What are the risks? What are the benefits? Let's break it down. The company is Cava, C-A-V-A. They are known, according to some, as the Mediterranean version of Chipotle. Now, I've been to one. This was like 2018. It was delicious. It was also expensive. And I just got like one of them fancy bowls that people get when they're on Wall Street. I don't know. But again, it was good. People like it. But here's the thing. They went public today. The stock was up well over 90% in a single day. And if it's going to be the next Chipotle, you could be investing in something that could make you a millionaire here pretty soon. Why do I say that? One, Chipotle just this year alone is up more than 30%. Over the last year, it is up 69%. And Chipotle is a very, very good company. It has been one for quite a while. It is so good that we talked about it inside our members only. Just throwing it out there. But here's the thing. IPOs, initial public offerings, can be risky. And you may not have all the information just because people are throwing it out there online, and I don't want you to invest in something and then get absolutely burned. I want you to have the information and make the decision for yourself. So here are a few things that you need to know about IPOs in general, but also about Cava. Number one, their losses have widened over the last 2 years. Normally, when you are doing an IPO, it's okay. It's normal where you're losing money in the first few years, your losses shrink, and then you start becoming more profitable. Tesla did this. Almost every company goes through this process because when you're a new company and you're trying to grow, sometimes you have to borrow money. You got to take all our expenses. You have to build buildings. You lose money, those expenses and revenue start to come in. It pays itself off, and then you're off to the races. Well, Cava is a little bit different, at least in the last 2 years. They lost $37 million in 2021. Then it got worse and they lost more than $50 million in 2022. Why is that a little bit concerning? If I were to put this on a scale of 1 to 10, I don't know, I'd put it at like a 5. I'm right in the middle. Not the worst thing in the world, not the best thing in the world either, but this is a food business, not necessarily in the tech space. And you would think coming out of the pandemic with people spending more money, you would have made more money in 2021 and you would have made even more money in 2022. That had not been the case. But again, scale of 1 to 10, I'm at a 5. Not the worst thing in the world, but it is something that I would monitor and something you should know going into a company like this. The next thing you should know, IPOs in general are very risky within the first year to 18 months. Everybody wants to invest in the next Amazon, next Chipotle, next Google, next Facebook, blah, 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 blah. We all want to do that, okay? Everybody wants to do that. What we don't remember most times, especially in the case with Amazon, that first year, that first 18 months, it get real rough, okay? And a whole bunch of people don't survive investing in companies that start off very well and then lose 90% within months, okay? And this has happened very recently in case y'all don't remember. Here are just a few IPOs that were rough that first year or so. The one exception here is probably Zoom. If I remember correctly, Zoom, I think they debuted in 2019. They did quite well at first, and then the pandemic, did extremely well, and then things started to fall off. Other examples of rough IPOs, Facebook, years ago, it got rough. They renamed themselves Meta. That was one of the worst IPOs in history at the time. Uber was definitely, there was a New York Times article about how they were at one point the worst IPO in history. You had Lyft, you had Slack before they got acquired by Salesforce, Pinterest, what's another one that IPO'd? DoorDash, Airbnb. All of those got rough. Now, the asterisk here is the pandemic could have thrown some of those things off, and the environment was different. Investors were much different in 2021 and definitely in 2020. Fair point. Fair point. There's a reason why nobody really IPO'd in 2022. Cava waited. The market is different. Investors are different. They may be able to survive that. However, Facebook that I mentioned, Zoom and Slack, all those debuted before the pandemic, and they did not go so well. And again, I would venture to say, and this is just from my observation, 80 to 90% of IPOs fall into that category where they do very well very early and then really start to tail off and do quite badly and underperform the entire stock market within that first year to about 18 months or so. Now after that, all bets are off. The company could do well from there on out, says history. Another one you can throw in there is SoFi. Another one you can throw in there as well is Snowflake. Haven't done well from their very IPO date. We'll see where Cava falls in that scenario. The other thing too is you can wait. Okay, you don't have to invest on day one to get in on the ground floor. At this point in time, Cava has roughly 260 or so restaurants. If they continue to grow, obviously they're raising a lot of money. They are going to expand. They plan to expand. Well, let's say you get in between now and the 300th restaurant and they go to 1,000 in the next several decades. This could be a chance for you to continue to grow with the company if they expand and if they grow to be as successful as Chipotle or any other competitor. That could be a very good growth opportunity. The question is $40 what you should pay for it, or should you wait and buy it at $5? Will it come down to $5? Will it come down to $20? We don't know. That's something that we're going to have to find out here pretty soon. But the main thing is, Cava is a decent business, but we don't know enough about it because it hasn't been around long enough to really test and see and get a great estimate for what the value of the company is. But also IPOs in general are very rough. As you have seen over the last 3 years, and you could really go back, I'd like to start at 2019 until now, a lot of these IPOs start off real hot and then they just go into a box. You don't hear about them for a while. I think I mentioned Peloton. Coinbase could be another one that you can throw in there. They all start off real nice that first day. They get all the headlines, everybody talks about them, and then people get real quiet shortly thereafter. Revlon, where that stock at? Right? Everybody was talking about that IPO as well. So again, we'll see what happens, but I just want you to be very careful before you jump into it. What I will do is, just like I do everything else, I like to sit back on the sideline for IPOs. Like sit back on the sideline, I will peruse, I'll read, I'll add it to my watch list, and then if I think the business is in the right space, in the right direction, the right value, then I'll decide to jump into it. But what I'm not going to do, and what I don't think anybody should be doing, is just hopping on it just because it's on my timeline. Okay? All right. That is it for me. I will talk to y'all tomorrow. I feel like it's Friday, but it is not Friday. Also remember that Monday the stock market is closed for Juneteenth. So don't be on your investing app trying to buy stuff. Okay? Don't do that. It's closed. All right. That is it for me. I'll talk to y'all on tomorrow.